Hello, everybody, and hello, Monique. Welcome
Hi,
to
Theo.
welcome to the update. We've got literally 3 months to go until the end of the year. It's gone by very quickly, but it's going to be an interesting 3 months. We have the municipal elections early in November, and then we have the Zondo Commission report due at the end of December. So it'll probably land on the president's desk somewhere in December. And then it's a matter of when will the president release the report to the rest of us. What is very interesting is to what extent the president is already warning the party of the outcome of the Zondo Commission. And the president is specifically focusing on one area and trying to warn the senior members of his party. And that area is around the cadre deployment policy. Remember, in 2013, the ANC decided on a policy of what they termed the decade of cadre deployment. And President Ramaphosa is warning the party that that decision, that principle, is going to be criticized quite heavily by the Zondo Commission, because that kind of set the structure or the background for the state capture cadres, or the however you want to call them, but gave the structure and the background for certain people to be moved and to be appointed in very senior positions. So I think what Ramaphosa is trying to warn the ANC is the report is going to come heavily down on the principle of cadre deployment, because that gave the state capturers the structure to move people in positions, to fire boards, to fire CEOs, to fire director generals, and to move their own people in there. So he is starting to warn them of that. The key, however, will be yes, Zondo will report by the end of December. The question is when we will see that report, and then the action taken on that report. Just from a cadre deployment, what we have seen is that since Cyril Ramaphosa took over, he's changed the senior management at SARS. Remember, we had Tom Moyani, now we've got Mr. Kieswetter. He's changed the heads of the National Prosecuting Authority. We all know we had Sean Abrams, that is no longer the case. He's changed the head of things like the NEL, Transnet, Eskom. We have Mr. De Ruyter now. And we have new boards in all of these places. So I think there is that some of those actions have been taken. The question, however, is the report, to what extent it will be damaging. I think from ANC's point of view, they are extremely happy that that report is not going to come out before the municipal elections. But we'll have to sit and wait for December.
Thanks, Theo. So we are seeing quite a bit of volatility. Is the offshore market expensive at the moment?
Well, that's a difficult question. It is certainly not cheap. The question is, how expensive is it? And is it expensive in the sense that there's a risk in the market or not? Now, if you use various valuation methodologies, and there's no one methodology that tells you that markets are expensive or not. But let me go back. Warren Buffett used to have a methodology that he still uses, where he takes the market capitalization or the market value of the US market and compares that to the US GDP. And if the market cap is higher than the US GDP, he notes that it is expensive territory. What I think we have to realize in the last decade or even 2 decades is the big IT companies are currently the biggest companies in the world by a long shot. So if you were to add the big 5 or 8 IT companies, and I'm talking about the Facebooks and the Googles and the Microsoft and Alphabet and those kind of companies, Amazon, if you were to add them, then yes, it is expensive. But now you have to look at those companies. Although you measure the market cap to the GDP, remember those companies are international companies. Microsoft, Google, Amazon, they do business all around the world. I mean, we talking here on Microsoft infrastructure. So the point is, Microsoft is a worldwide company. So to try to measure the value of Microsoft relative to the US GDP, I think that makes it difficult. 20, 30, 40 years ago, the big companies were very dependent on the size and the quality of the US economy. That's not the case. But I am not going to disagree with Mr. Buffett. So Mr. Buffett says the market, according to that measurement, is expensive. If you then look at the price earning ratio, the PE ratio, you can distill that down to a ratio where you try to normalize it, the so-called CAPE ratio, where you try to normalize the valuation relative to earnings, then yes, it's on the expensive side. But remember, US earnings is still recovering from the from COVID. US margins is at an all-time high. Company profit margins. Usually, when companies' profit margins are at an all-time high, there's only one way they can go, and that's down. As the economy picks up, as inflation picks up, again, it's on the expensive side. So, from a point of departure, international markets are definitely not cheap. How expensive they are is a relative discussion. And that comes back to our view, although, and we'll discuss that a bit further, although our view is still, if your offshore exposure is below what you should be, the rand is still, even at these levels where you should take money offshore. When we, however, implement your offshore portfolio, we do it over a period of time, simply because the markets are certainly not cheap. What is the risk of a massive pullback, a 20 or 30% pullback? Remember, we see these pullbacks in the last 20 years, we saw it 3 times. So it's not strange to have pullbacks of 10 or 20%. It happens from time to time. In effect, if it were to happen, it wouldn't be a massive surprise, but it might be to a large extent something that markets will discount. The key there is, as long as there's uncertainty of the growth, there is that risk. Secondly, there's a big debate about inflation. To what extent is inflation a temporary measure, or to what extent is it more permanent? And if you just see what the pressure currently on temporary inflation because of supply bottlenecks, yes, the central bank in the US believes it is temporary. They call it that is a transitionary period. There is pressure on wages specifically. I mean, if you just look at both the US and the UK, they struggle to find people to fill positions. In the UK, there's something like 1 million open positions that they can't fill. In the US, they've got the same problem. People are struggling to find people to appoint. There's big signs that we are hiring now. That usually gives idea of longer-term inflation. We might get inflation, which again, the Fed has noted might push up interest rates. So, but while the economy is in a recovery phase, the chance is small. Having said that, markets are expensive. Is it to a level where I believe one should take drastic action? Absolutely no. Is it at the level where you have new money, you phase it in? Absolutely yes. I hope that answers your question.
Thank you, Theo. I've seen quite a bit of reports regarding the changes in regulation in China. What effect can that have on our South African market?
Look, I think we've already seen the effect of that. If you look since the beginning of the year, Naspers, by far the biggest single company listed on the JSE, if you add Naspers and Prosus, which basically has the underlying same asset, which is 10 cents, if you add them, that's not far off a quarter of our market cap. Now, Naspers since the beginning of the year is down about 15% in South Africa, where the rest of the market is up about 6 to 7% since the beginning of the year. So if your biggest single stock is down by 15% and the rest of the market is up by about 7%, it shows you the big impact of that. Secondly, 10 cents, which is primarily the asset of Naspers since the beginning of the year, is down about 20%. So the question you have to ask yourselves is the Chinese government regulatory risk. To what extent is that in the price of these shares, or is it not fully discounted in these shares? If it was, now, what we sometimes forget about China, things like Twitter, Facebook, YouTube is all banned in China. The government regulates internet, they regulates content, they regulate the way you interact with content, and they believe that there's a role of government to make sure the content is applicable for what they believe the long-term nature the long-term development of the Chinese community is. And some of these elements one can't disagree with. The fact that they're very strong in limiting access that kids can have to play games, that they limit that to certain times of the weekend and then only for a certain number of hours. That's something that we're not used to in a free market or free society environment. And in South Africa or in the West, in America and in Europe, those kind of things will come with social pressure, will be years and years in the making before it happens. In China, they simply look and say, look, kids can't spend half their day on a game. But there is there's a regulatory risk that one needs to look at. And if you want to see how that can pan out, just look at Alibaba and the fact that Jack Ma, the founder of Alibaba, has all but disappeared from the public domain. Simply because there were certain things that they were doing that did not carry the favor of the Chinese government or the Chinese Communist Party. So it's all about there's a risk, a regulatory risk, and is it discounted in the share price? Now, I don't know if it's discounted or not, but that's why if you look at the structure of our portfolios, although Naspers and Prosus from a total market is close to 25%, they weigh down that in our portfolios, and that's part of mitigating the risk. Yes, one would have been criticized when Naspers was flying, when it was going up. You didn't share in that performance totally. But now when these risks come in and there's a single company risk, it's been mitigated by the fact that we're much more lower in terms of our exposure in the portfolios than one would have been if you had been on weight. My view is I think this is a long time to play out. We haven't seen the end of it. But I also do think that the companies like Tencent and Naspers are working very hard to make sure that they keep favor with the Chinese government. It's a different question to what extent that's the moral side. I'm not talking about that, and I don't want to have an opinion or express an opinion on that. But the long and the short is there's a risk when you do business in the Chinese environment. And the question is, with Tencent down 20% in Hong Kong, is that risk fully discounted or not? My view is it will remain volatile, and I think we're going to see the same volatility carrying for the next 6 to 12 months until there's a new kind of relationship between the Chinese regulator, the Communist Party view on what the role of private enterprise is and how the company adapts to that. I do think what we're seeing in China is that they tolerated the capital model, but there needs to be a social conscience to that. Now, in the West, that takes years and years to implement. In China, it's very quickly the regulator implements what they believe should be the social responsibility. And I hope that to a large extent, most of it's been discounted in the share price, but I wouldn't give an opinion on that. And that's why you keep it below the weighting in portfolios, but you do not want not to be in the Naspers process structure.
Thank you, Theo. So we've seen a weakening in the rand over the last month, as well as a drop in our markets. What has caused the shift in the rand?
Look, I think there's a few factors. Number one, remember our house view is still that anything stronger than 1550 is levels where you should take money, where you should make sure that your offshore exposure is in line with your long-term strategy. So the fact that it weakens from closer to 14 to weaker than 15, I wouldn't say that is massive changes in the bigger picture. That is the kind of changes that you will see in a normal trading environment. Remember, we started the year at about 1470, 1418, and we're currently at about just weaker than 15. So it's not massive changes. Yes, there's volatility in between, which we'll always have. I think there's a few factors. Number one, the US inflation is higher than what everybody expected. That means the purchase power parity between us and the US shows to a lesser degree that the rand will weaken over periods of time. But I think that's not a permanent nature. The South African Reserve Bank is very strong that they would like to see inflation closer to 3% than the current 4.5% average we have. That should be supportive of the rand. The negative side on the rand is we had very strong commodity prices supporting the currency, and there's a long-term relationship we're a commodity-based economy. There's a long-term relationship between commodity prices and the value of our currency, and certain commodities, unfortunately not oil, but a lot of these commodities, the prices have come down quite a bit. They've cooled a bit, which means that there's usually pressure on commodities. And then with the indication that with inflation in America, there is a very good chance that we will start to see interest rates starting to hike in the US as we get closer to this year and early next year. And those kind of things usually supports a stronger dollar. Again, I'm not concerned about it. I think this is normal volatility that you see during any course of any year. Perhaps 14 was a bit strong. I'm not sure if we're going to go back there or not. But remember, this is still in line with our longer term perspective that anything stronger than 1550 is levels where you should look at your international exposure.
Thank you, Theo. So just a note on our phase-ins offshore. So you mentioned that the markets are quite expensive. So we would recommended phase-in period for your offshore investments is between 3 and 6 months, depending on the amount that you're investing. So the strategy would be if the rand is below 1550, that we take the capital out, but then once it is offshore, then that we phase it into the market just to smooth out some of that volatility in the first couple of months of the investments. And then the same would apply to your local investments. Yes, our markets are trading at a good valuation, but there's still quite a bit of volatility in the market. So we also, depending on the amount, we'd like to phase in the capital over a 3 to 6 month period.
Yeah, I think that's what needs to be cognizant that although when the rand was closer to 14, we still our view was still 1550 is levels where you should take offshore, should increase your offshore exposure. Should it weaken to below to weaker than that? Unless underlying fundamentals were to change, we will take then a bit of time or phase in the taking out the money. But once your money is where it should be in the currency where it should be, either rands or dollars where you want to be, simply the volatility is and the levels is to such extent that you want to mitigate that, and you rather not want to have one entry point but have an entry point over 6 months or so. Well, Monique, thank you very much. I do think that we've got 3 months to go till the end of the year. I hope, and this is more hope than anything else, that we have seen the worst of the COVID in South Africa and worldwide, and hopefully come December, the beaches will not be closed this time around. And I just want to urge everybody that, remember, this affects people in different ways, and don't forget that most people are heavily affected from a psychological, emotional point of view, and not even to talk about those friends and colleagues and families who have lost people to this pandemic. We really feel for them, and but in terms of your family, your friends, the working environment, please be cognizant that this does put emotional strain on people, and allow for that, and be cognizant of that. Monique, thank you very much, and all the best.
Thank you, Theo.